Markets have broken repeatedly, often faster than investors expect. In 2020, markets collapsed more than 30% in just weeks. Liquidity vanished, correlations moved to 1, and diversification stopped working. Volatility spiked only after most of the damage was already done. In 2023, risk was quieter but no less dangerous. Regional banks lost nearly half their value while the broader market appeared stable. Volatility normalized quickly, even as sector-level stress persisted. In 2025, policy uncertainty triggered sharp drawdowns and sudden volatility spikes. Fear surged, then faded, without a systemic breakdown underneath. Each crisis looked different, but one lesson was clear. In each case, risk didn't rise gradually. It snapped. Yet most portfolios still rely on a narrow set of risk indicators. They are useful, but incomplete. VIX reacts after fear arrives. Moving averages and credit spreads, popular trend signals lag price. Single metrics miss stress building beneath the surface. What often gets missed is market structure. Participation risk appetite rotates from cyclical to defensive. These fractures often appear weeks before drawdowns, but they don't show up on traditional dashboards. This is the gap. Altquant.ai market risk infrastructure, or MRI, is built to address. MRI is not a single signal. It is a risk infrastructure layer. MRI aggregates volatility structure, breadth, participation, trend convergence, and risk appetite factors into a unified regime and severity framework. It is built for portfolio managers, RIAs, hedge funds, and systematic strategies that need to manage exposure across changing market conditions. MRI does not predict markets. It classifies risk. It answers one question consistently: what regime are we in, and how severe is the risk? The system has been backtested across more than 6 years of market history, spanning multiple cycles and drawdowns. It escalated risk during COVID. It remained defensive through the 2022 bear market. It flagged banking stress in 2023. MRI is fully deterministic. The same inputs always produce the same outputs. No black box models, no parameter drift, no opaque learning systems. Market risk infrastructure is available today on the Snowflake marketplace, with visual intelligence and historical context on altquant.ai. Trial and paid tiers available on Snowflake with 4 to 6 years data for validation, from regime signals to full risk attribution, ready to integrate into existing portfolio workflows. Why now? Because protecting downside is about seeing risk early and acting deliberately.